From the Northeast Georgia Business RadioX studio, it's The Bottom Line with Jacqueline Sheldon. Maximize your return on investment by reducing your tax bill. Get ready for the best tax talk you've ever had. Presented by Bottom Line Tax Solutions. Hello, Jacqueline.
Hi, Tom. How are you today?
I am fantastic.
That's awesome.
I'm always fantastic.
Yes, you seem to be.
We have cameras in the studio.
We do. It's a little daunting, I must say.
We're taking our stardom. I almost said fandom. We're taking our stardom to yet another level. Brand new 4K cameras in the studio.
Yeah, that's awesome.
I hate to say that I can't tell the difference between them and the other ones we had, but
Okay, well,
I shouldn't say it out loud. What are we talking about today?
I don't know, Tom. What are we talking about today?
I want to talk about it's year end.
It is year end.
We are days away from Thanksgiving.
Yes, it's coming to the close of the year very, very quickly.
What are you thankful for?
Oh, I've got so many things to be thankful for.
Wow.
Thankful for family and health, just the blessings of life.
The blessings of life. A buddy of mine asked me earlier what I was thankful for, and I said boneless wings.
Boneless wings.
Yeah, that is fact. Well, I mean, he asked, so I told him boneless wings.
All right. Well, you know.
You don't have to get your hands nasty.
Well, that is true. But
The cleaner your hands are, the cleaner your shirt's going to be.
I don't know that would be on the top of my Thanksgiving.
Oh, I didn't say it was the top.
list,
I said it was just part of what I was thankful for.
Okay.
Off the cuff, boom, boneless wings.
All right. Well, there
Prove
you go.
me wrong.
There you go.
There are wing connoisseurs out there screaming. It's okay.
Yes, there are a lot of people think boneless wings are not wings.
They say they're glorified nuggets.
They are glorified nuggets. They're nuggets with sauce on them, dear.
Well, that's okay, but my hands are clean.
They're not
I don't
wings.
like my hands dirty. I will get my hands dirty, but I want my hands clean,
Okay.
if that made any sense at all.
Boy, this went way down the rabbit hole.
But we're getting to the good stuff. It's the end of the year.
It is the end of the year. We are doing a lot of year-end tax planning in our office
That's
with our
what I
clients.
was getting at.
Trying to get them ready for next tax season and make sure we take all the deductions that they're legally entitled to and put some strategy in place between now and end of the year to hopefully save them some money when they file next April.
So how do you do that?
How do we do that? Well,
Here's a big box full of stuff. Find me deductions.
well, no, there's lots of things that we look at with clients when we're doing year-end tax planning, and it depends on their tax situation, whether they're a business owner, whether they're a real estate investor, W-2 employee. Depending on their situation, there's different strategies that they can utilize, and there's a lot of things they can do between now and year-end to maximize their deductions and help to reduce the amount of taxes that they owe, just depending on their situation. W-2 employees, for example, we'll talk about that for a second. If they have a retirement plan at their job, they want to make sure they max out their contributions to that retirement plan before year end. So if they haven't maxed out that 401k plan, now's the time to do that. Put a little extra in there before end of the year, and especially if they get a year-end bonus, they might want to stick a little extra in there to help reduce the tax burden on that money.
In the IRA.
Yes, in the 401k.
401k. What if they don't have one? They need to start one.
Well, if the business doesn't have a 401k, then and they're a W-2 employee, then they may want to look at doing a traditional retirement plan and putting some money into that. Or if they're a business owner, then they may be able to set up a retirement plan through their business. And there's several different options there, just depending on their business structure and the amount of income that they would like to defer.
Does someone need a accountant to do that, or do they need a financial advisor to do that?
To actually set it up, you would want a financial advisor to
Okay.
help you get the plan in place, because there's plan paperwork that has to be done, and you have to know the ins and outs of the plan and
Right.
what the rules of the particular plan are. But yeah, there's a lot of options there for small business owners. You know, people can do it themselves, but I usually tell them to go to a financial advisor to make sure all their I's are dotted and their T's are crossed and they're doing it correctly.
Do you know any good ones?
I do.
Do you?
I do.
Depends on what day of the week it is. Sometimes I do, sometimes I don't.
Okay. Yay.
Yeah.
Depends on if you're making money that day or not, isn't it?
Well, no, see, my financial advisor is like a brother to me. And yes, we fight sometimes. And if we're making a lot of money in the market, it's because I told him what to do.
Okay.
If we're losing our tail, it's because I listened to him.
Okay.
God love him.
But I understand he's your oos.
He is my oos.
So there you go.
We're ooses. And whoever catches that reference, you're awesome.
So at the end of the day, you know,
Ish.
you're, end of the day-ish,
Ish.
day one-ish.
Ish. Well,
Okay.
if anyone caught that reference, they're really cool.
All right, so let's.
What were we talking about?
I don't even know. Year end. So we're talking about W-2.
Year end.
And putting money into
okay,
retirement plans.
W-2 employees, though, I don't want to say they got it easy, but W-2 employees, hey, I need a loan to buy a house. Well, let me see your W-2. Awesome. I want to buy a car. Oh, you're a W-2 employee. Awesome. Here's a loan. Here's a car. It's the business owners. It's the small business owners who don't have that luxury.
That is true. If you're trying to purchase a home or refinance a home or maybe even buy a vehicle, it's a little bit harder when you're
Sometimes
self-employed.
it's lie, cheat, and steal. I know I've been there before.
Right. Well, it's all based on your financial statements, and a lot of times small business owners, they're kind of in a quandary because they want to write off everything that
That's
they
what I was
possibly
getting
can to reduce their tax burden, but then oftentimes that puts them in a situation where they're not showing the income they need to show to get the
Right.
loan. So it's kind of a fine balance between the two. You really can't have it both ways.
You cannot. But for those not buying a house next year or currently buying a house, they want to save as much money on taxes as they can. They want to write off everything but the air they breathe.
And in most cases, that's true.
It is true. No, I'm not. That wasn't a question. That was a statement. But how are you going to help someone legally, of course? Legally, of course. We're not running everything through a company in Columbia,
Right.
though that's a thought. No, kidding. What are you doing for those folks?
Okay, well, if they're small business owners, then there again, we're looking at a lot of different options. One thing that we always want to look at is entity structure. As a matter of fact, I spoke with a real estate agent client today who, with his commissions since October and what he has on the books to close by end of the year, he's going to make an additional $60,000 this year.
Congratulations.
Through his LLC.
Yeah.
So we are actually going to go back and do a late S corporation election, get him put on payroll before year end, and we'll be able to save him a substantial amount of Social Security and Medicare tax. So that's just 1 year.
So he can change his entity 11 months into it.
Well, what we're going to do is we're going to go back to October 1st. We can go back 75 days. Mm-hmm.
Okay. There's a limit. There is a limit.
Right.
75 days.
Yeah. For a regular election, we can go back 75 days.
Okay.
Now, we could make a late election and go back to the first of the year, but because of payroll not being run all year, we don't want to do that. You'd have a huge payroll tax burden right now if we did that. So we're just going to go back to 75 days. And we decided to go back to October 1st. That's going to put this $60,000 in extra commissions into that S corporation period, and it will save him some Social Security and Medicare tax without him having to do.
7%?
It's actually 15.3%.
Okay. Wow. Never mind.
So we'll be able to.
That's why you're the accountant.
We'll be able to save him some money there. So that's just one year-end strategy. Another year-end strategy that I'm looking at with a lot of our clients goes back to retirement plans, which is what we talked about before. Things like a SEP plan for a small business.
What?
A SEP.
Oh, SEP. Okay.
SEP.
Yes.
And it actually stands for Simplified Employee Pension.
Of course it does.
A lot of people call it self-employed pension because it works for that acronym as well. But it's a simplified employee pension. The great thing about that, though, is doesn't go through payroll. It's actually a company contribution into the owner's or the employee's retirement account. And it can be made up until the due date of the tax return. So they can actually get a 2024 deduction and not fund this account until when their taxes are due in 2025. So they've got some time to
That's
be
a lot
able
of
to
big
fund that.
words. It really is.
It is a lot of big words, but they've got time to fund it. So they don't have to make that contribution by December 31st. We've got time to get money into a SEP plan.
Well, that's the whole idea, though, because on December 31st of whatever year, it could be really too late to do much of anything.
Well,
on
it is.
January 1st, the next day, it is too late.
Right. In a lot of cases, but like I said, a SEP plan is one of those exceptions that you can actually do it after the close of the tax year and still get the deduction for the prior year.
Oh, that's cool. That's cool.
So, yeah, that works out well. Outside of that, we always look at income shifting strategies. Is there a way to shift strategies from the taxpayer's income bracket into a lower bracket? Sometimes that entails hiring their kids to work for their business. Kids are going to be out of school quite a bit over the holidays, so there might be some opportunity there to work those kids and pay them and take money out of the owner's tax bracket and move it down into a zero tax bracket. So that's another strategy that we look at. Another great strategy along with that is if you have a child with earned income, then you could put money into a Roth IRA for that child, which is just, there again, gives the child the ability to build some wealth tax-free. So that's another great strategy we look at. As far as income shifting too, we kind of look at, depending on if the business is a cash basis taxpayer or if it's an accrual basis taxpayer, how do we want to handle billing clients? Do we want to wait a little while, things that we might normally bill the last week of December? Do we want to wait until January 1st and bill those things to push that income into the next tax year? Or do we want to accelerate deductions, go ahead and prepay some expenses in December that we normally wouldn't pay until January or February to try to pull those deductions back into this tax year? So there's a lot of things that can be done within the last few weeks of the year to make a difference. Also, if the company is looking at buying new vehicles or buying new equipment in the next 6 months, we may want to go ahead and accelerate that and do that before year end to move that deduction into this year as well. So there's a lot of different tax planning strategies available for small business owners between now and year end if they want to utilize those.
I've never bought into the, no puns intended, I'm going to go buy a $70,000, $80,000 SUV, truck, vehicle, whatever, to save $5,000 in taxes.
Well, my thing has always been you never buy something just to get a tax deduction.
I agree.
If there's
Few people do that.
if there's a business need for it, if the business needs a new vehicle and you're looking at in the next 6 to 9 months, then you may want to go ahead and do it this year, but don't do it just to get a tax deduction. I can't tell you how many times I've seen that happen over the 32 years I've been in business, and I've seen clients get themselves in trouble because they'll go out for a year end and buy 2 or 3 vehicles. They write them all off in this year, and then for the next 5, 6, 7 years, they're making payments, and they're not getting any deduction for those payments because they've already written off the vehicle. And so then the next year, their income's higher, and they don't have the cash flow.
Just go buy 3 or 4 more vehicles.
So they go and they buy more vehicles.
And they trade them.
Exactly, and it's kind of a snowball effect to the point where eventually it's going to catch up with the taxpayer and they're going to have a huge tax burden because of it. So they're
going to have an empty pocket because of it.
Yeah. So I never encourage my clients to buy something just to get a tax deduction. I mean, it makes no sense. I mean, I'll sit here all day, and if you'll hand me $80,000, I'll hand you back 20.
Well, if someone needs a big tax break, they need a write-off. There's a magnificent podcast studio right here in Jefferson, Georgia.
Yeah.
Looking for naming branding rights.
That is true, and that would be a great advertising opportunity for someone who could also get a tax deduction
Marketing
for.
out the roof.
Mm-hmm. And if they got that in before year end, that would be a great tax deduction.
The Bottom Line Tax Solutions Studio.
Yeah, there you go.
Recording live on the beautiful Empower College and Career Center campus of Jackson County.
It does have a nice little ring to it,
doesn't it?
doesn't
With a giant logo. I won't move because there's cameras. I'm afraid to move too much.
No, just a little daunting with the camera.
It's okay. Don't move. But a giant logo on the wall. So to all of your grand clients and future clients who need to drop money in a grand marketing campaign, I have their answer.
Well, there you go.
Yeah.
There's another strategy we didn't have on the list.
And we can buy even better cameras.
Maybe somebody to operate them that knows what they're doing.
Well, that's probably true. I'm not a camera person, but suddenly I am.
Mm-hmm.
Hey, look at me. Jacqueline, we're going to take a real quick break, and we will be back to discuss something exciting.
Oh, boy.
Are you paying too much in taxes? Who isn't? Taxes are the highest expense small businesses face. Maximize your return on investment, reduce your tax bill. Tax planning and tax resolution strategies, the art of keeping more money you've worked hard for. Schedule your free tax planning consultation by visiting bottomlinega.com. That's bottomlinega.com. Jacqueline, did you survive the exciting commercial?
I did. I thought it was awesome.
It was. What were we talking about? Saving money end of the year. It's crashing down on us.
It is.
Now, before we wrap this up and get to our, second topic, I don't know. You did earlier bring up the word election.
Yes.
I think you were talking about entity selection.
Did I say election?
You did say the word election, not necessarily, you didn't use it in the wrong way.
Okay.
But you brought up the word election.
Okay.
It's my job as a host to listen.
Okay.
And when I hear the word election, my mind just goes places.
Mm-hmm.
We just recently had a nationwide election.
We did, and I believe last time I was in studio, we talked a little bit about what the potential tax benefits or the potential tax problems we could have depending on the result of that election.
We're going to save that for the next episode
Okay.
of The Bottom Line with Jacqueline Sheldon.
Okay.
But yes, 4 years ago, I think we jinxed everything.
How did we do that?
Well, I kind of picked a winner.
You did, and you...
And we won't go down the road of what happened during that election, whatever. But that's not why we're here.
Right. We don't have enough days to sit here for that.
We don't. And yeah, we don't. But in the next episode of The Bottom Line, we're going to talk about the most recent election and how that implicates, that's a big word.
Impacts people's taxes?
Impacts people's taxes. Thank you.
Well, there you go. I think I'm
looking forward to it already.
Okay.
Back to business at hand. There's a thing. And Lord, at this point, it's a thing. BOI.
Yes.
Report.
The dreaded BOI.
Or as they say back home, the BOI report.
That's what you like to refer to
BOI,
it to.
BOI, boy. I mean, that's what it says.
Yes, boy.
Yeah, well, yes, boy. That's something different. That's like combining the two. And if someone caught that reference, they're really, really, really cool. The BOI report.
Yes, that lovely BOI
report.
report.
I recently did 2 of my own.
Yes, you did.
I'm so accomplished.
And you only had
11 months to do them.
Well, but you only had 6 questions.
It was more
to
than
me on how to fill it out for a 8-question report.
Well, no, there was more than that. There's 36 different boxes, but half of them grayed out.
Yes.
A government agency, something? No. What is the agency that runs that?
It is called FinCEN.
FinCEN.
The Financial Crimes Enforcement Network, or FinCEN for short.
FinCEN.
FINCEN, Financial Crimes Enforcement Network.
Right.
And if you are scared of the IRS, you need to be even more scared of FinCEN.
FinCEN. FNCEN, right?
They're all about the criminal activity.
Is that what it is?
It is.
So if you don't do the report right, they're going to come get you. Well, if you don't do the report, they're going to come get you.
Well, basically, let's back up for just a second. I know we've talked a little bit on previous episodes about this beneficial ownership information reporting
on it. I know,
but just so that listeners are back in the loop of what we're talking about, entities that were set up through the Secretary of State, whether it's an LLC, a corporation, if it was set up through the Secretary of State, it could potentially have a BOI reporting requirement that is due by December 31st of this year. Basically what that is, it's beneficial ownership information.
Boy.
And the company has to go in and fill out some information. It has to disclose who the beneficial owners of this company is and also upload their ID, whether it's passport or driver's license. And it's basically what the FinCEN organization is trying to do is cut down on money laundering. They say most money laundering happens in smaller LLCs. So they're making LLCs disclose who the owners of that entity are so that they can kind of connect the dots between LLCs to be able to trace money laundering.
So they're going to trick the criminals.
Yeah, well,
good luck with that.
Yeah, well, that's what it's all about, how it's actually going to work.
So they're going to put guys like me, and believe me, money laundering, there's no money making, let alone laundering here. So, my money's very clean because I don't make any. Yeah. So they're going to put me through torturous questions and boxes to check.
All right. Well, you
they
have
can
to
check
admit.
So no, wait a minute now. This BOI report, I'm a hardened criminal, multi-billion-dollar international conglomerate doing some business here in America, probably not on the up and up. Mm-hmm. I'm going to sit down and fill out a report and tell them all about me so they can come pick me up tomorrow.
Well, I hate to say
How absurd is that?
I hate to say it, but I've said that several times as well. Anybody that's money laundering is not going to go in and file a BOI report.
They just closed that LLC. They burned it to the ground.
Yeah, they're not going to go in and file that report. Only the people who are honest are really going to go in and file these.
Make the innocent people pay for it.
Exactly. But the fine for not filing it is $591 a day.
Big money.
So up to $10,000 unless there's criminal activity, and then it can be up to $250,000.
Or jail time.
And jail time, yes.
Yeah.
So there are penalties associated with. To be honest, I doubt they will come after people who didn't file and there's no criminal activity and they just didn't know that they were supposed to file these reports. This is not something that's widely known. A lot of it was put on the accounting community to let our clients know, which we've done on several emails and chats and things with our clients to let them know, and even on our tax organizers, asking them the question, do you own an entity? Do you know you need to file this BOI? Also, the Georgia Secretary of State sent emails out to everybody who has an entity registered in the state of Georgia. So most people should have at least gotten something from the Secretary of State to let them know that they need to file it. Now, to be honest with you, a lot of my clients that weren't aware of it, that hadn't read our emails, have come to me and said, is this legitimate? Is this a scam?
Well, yeah. You don't know.
And, do people read their emails from the Georgia Secretary of State? Maybe, maybe not.
Okay, now I know these questions, these answers, because I just did 2 of my own. Do you have to pay anything to put these reports through? Do you have to come up with any money out of your pocket?
No, there's no fee to file the beneficial owner information report with FinCEN. So it's filed online. There's no paper. I've had a couple people ask me that. Well, where did I get the form? There is no form. It's all filed online, and no, there's no fee. Now, if you pay someone to file it for you, you will pay them a fee for doing the report for you. But to be honest with you, the report is relatively simple. There's a couple things on there that's a little confusing, I've found, for clients who try to fill them out on their own, such as my husband, who didn't understand question number 16.
The only reason your husband questioned 16 is because his amazing wife, tremendous woman, she had brought up question 16 a few hundred times. So when I got to it, I'm like, okay, I'm supposed to know something about question 16. And I would have answered it correctly, but I stopped myself and said, Tom, before you FinCEN this, you better ask. And then, of course, I was ridiculed because I did know I would have done it right.
Right. Well, the question asks you, it was your business in existence
but it's
before
worded backwards.
January 1st, 2024. Question number 16 on their report, just in case anyone has to fill it out, you need to click that box yes if your entity was in existence before January 1st, 2024.
Right.
If it was formed in 2024,
this year,
then you've got to put the information for the person who actually set up that LLC
Probably
or corporation
your
with the
attorney or
Secretary of State. So
Could be you.
It could be you, or it could be your attorney. The problem is now you have to have your attorney's information to be able to file the report.
Yeah.
So I think in a lot of cases, if attorneys are setting up entities for small businesses, they're probably going to go ahead and file that FinCEN report at the time.
They should be.
That, and new entities have 90 days from the time they set that entity up to file that report. They don't have until end of the year.
Right.
So there's also that time period that needs to be met. So attorneys really should do this for people setting up.
Yeah.
And then this is a one and done unless there's a change in the company information.
Change as a new owner, change in address.
Change a new owner, change a new address for the business, or change a new address for an owner. So if you have an owner
someone moves.
move, you've got to go in.
So when I move to Costa Rica.
Right, you've got to go in and update that FinCEN report and let them know where you're hiding that money in Costa Rica.
Oh, well, that's a good point there.
So
next year, boom, calendar year, we're in next year. The only entities filing are those that are newly created, or if a change is made, or if you didn't know about it, or by this point, if you forgot, bless you, and you're going to be late filing it.
Right. If you, for some reason, missed the deadline, then you probably do need to go ahead in 2025 and file if you don't file
as
before
soon as
December
possible.
31st, right? Just to try to get in compliance. That way, if you ever are audited, you can prove, hey, I didn't know, but as soon as I found out, I went in and I took care of it ASAP.
It's $500 a day starting on January 1st.
It is. But again, I seriously doubt that will be enforced for somebody who didn't willingly not file.
I wouldn't want to risk it, but I don't believe that. I think they'll come after you because that's what they do.
Right. Well, they could.
But now this is not governed by the Internal Revenue Service.
No, this is a totally separate entity, the Financial Crimes
Is it under
Network.
Homeland Security?
I believe it is.
Yeah.
Yes.
And forgive me, I love all you Homeland Security people as I look at the camera. They play by a different set of rules.
They do.
The Patriot Act.
Right. They do. It's a totally different set of rules.
They're
And like I
protecting
said,
the country.
if you're scared of the IRS, you need to even be more afraid of FinCEN.
Yeah.
Because
that was my point.
their powers are a little more than Internal Revenue Service.
They can, quote unquote, get by a little bit more.
Yeah, they don't play around, that's for sure.
But hey, if you're not doing anything wrong.
Right. There again, if you're not doing anything wrong, take the 5-10 minutes to Go online, file your report, be done, and then, like I said, you don't have to worry about it again unless there is a change.
A change, and pretty much a change in anything.
Right. Now, and I will mention this, and I don't want to go down this rabbit hole, but there are some entities that are exempt from filing. For example, you talked about your financial advisor. Because he has to have federal licensing to do that, he doesn't have to file a BOI report.
Okay, you just made it confusing, but yes.
So there are some
Talk to your
exemptions to that.
Accountant, if you
and your larger companies, they don't have to file.
A C corp probably doesn't.
Well, 20 or more employees, I believe, is one of the qualifications. But
Really?
Your larger companies don't have to file in certain businesses that are already regulated. So you may want to just check that. You can always Google it, go online, and you can get the list of exemptions for BOI filing. But if you're not sure whether you have to file or not, file.
If you don't have to and you do it, does it doesn't
Doesn't
hurt
matter.
you?
It doesn't matter. So if you're not sure, I would say go ahead and file it. Like I said, it'll take 5 minutes of your time. Unless you get stuck on question 16, then it might take you 10. But then
no, it took a whole afternoon because, well, some people just wouldn't get back to me. But it's okay. I see where I stand.
Well, some people were in the dentist chair, I believe, when you were texting me.
Some of the best excuses. I'm just saying. FinCEN, God bless them.
Funny how my clients want me to be on call 24/7.
Yeah. Yeah, pretty much. Yeah. What else we got to talk about?
I think we've covered it for the moment anyway.
For this grand episode.
We're going to wake up and it's going to be Thanksgiving, and then we're going to turn around. Thanksgiving fell late this year. It's going to be Christmas, and then it's going to be the new year and time to start getting ready for tax filing.
Woo. Best way for the folks to get a hold of you?
You can reach out to us. Our website is bottomlinega.com, or our telephone number is 678-866-4048.
Nice. And there's going to be an outro on that. Well, Jacqueline, thank you. It's always a grand pleasure.
Well, thank you, Tom.
To stop by the Northeast studio, the Bottom Line Tax Solutions studio. Wow.
Can we paint everything blue?
Oh, yeah. You got to run it through Empower, but I know people.
All right. Sounds good.
Well, Jacqueline, thank you so much. We shall do this again soon.
All right. Sounds great, Tom. Have a happy Thanksgiving.
I shall. For more information on today's topic, reach out to Jacqueline and her tax professionals at Bottom Line Tax Solutions, 678-866-4048, or visit bottomlinega.com for all your tax planning, tax preparation, and tax problem-solving needs.
Yeah, boy!